So stock market will be dropping back dramatically in last few days. Just look at Dow Jones graph. It is very hard to believe just this. We have been for one of the biggest bull market in the history, and the bull market have been last for more than 10 years, since 2008, and it's question right now will we are in the very bull market, because what happened last few days is unbelievable. Even I don't believe for myself, but Dow Jones has been dropping more than 4,000, and it is something very true of situation is that this had to happen today or in the future, because stock market has been very overextended, and it was just matter of time when correction will occur. But question is this just correction, or is this just the way for the next recession? So due to this stock market correction or potential recession, we will talk about one of the best single hedge fund manager in the world. It is Dalio. For those of us who does not know who is it is the hedge fund manager for one of the biggest hedge fund in the world, Bridgewater. So Ray Dalio is 70-year-old American, born in New York City, and founded the hedge fund Bridgewater. He graduated on Harvard, and his estimated net worth is over $18 billion. So that is just short from Ray Dalio. Before we started, I just want to thank you for watching, and have encouraged you to smash the like button and subscribe to this channel, because it is much very useful and free. And without further ado, let's get into this video.
So we had David Tepper had texted into the show on Friday and suggested right now that you have to be in the market full on. And so the question is whether everybody jumps on the train, everybody gets in full on, and then the problem arises that you're talking about.
I think that's most likely.
But then the question is, when do you jump off the train?
But also the question is, what do you jump into when you jump off the train? And the issue is, you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out, okay? So cash is not going to
So
be
what
good.
do you do?
So what you have to do is you have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance. And I think, you know, I don't want to grab, well, the headline's going to be, again, anyway, is I think that you have to have a certain amount of gold in your portfolio.
So in this part of this video, Ray Dalio said that cash is the trash, and this is very much true. And let me explain that. In 1971, US President Richard Nixon left golden standard and took off dollar from golden standard. What does it mean? That means that after that, US can print as much money as they want, and after that, dollar had to start to lose value, and that is the reason why cash is the trash right now. So back in the days, if you want to just get $1,000, you have to put in money $1,000 in golden value, and after 1971 it was not necessary, and US bank can US and bank over the world can print as much money as they want. So this is the reason why Ray said the cash is the trash. This is very much true. So due to this out of golden standard, interest rate of saving is very much dropped to the zero, and this is no reason there is no reason to hold the savings or dollar or some other value. You have to put this money in some very more valuable assets. So let's continue to this video.
Or you have to have something that's hard. There are three monetary systems that happen. The first is, in the old days, it had intrinsic value. You'd carry around gold coins. Then we come up with the idea of banks or even central banks. And what they do is they create certificates, we call notes, that are claims on those things. And we print many more certificates than there is money in the bank. And then that's a linked system. And so we did that, and we broke that in 1971. Then you have a fiat monetary system, which means that you can print whatever amount of money you want, and you can put that, and that's what governments do. So we're in that part of the cycle, bigger picture, so that when you think about things, the depreciation of the exchange rate and the printing of money, I think over the next few years is going to be the biggest.
So totally, as I said, and in 2007, in 1971, Richard Nixon took dollar of golden standard, and after that, dollars drop in value pretty much. And back in the history, there is some certificate which you have to put money in the bank to get back certificate, and in this time, of course, people just print more certificate than gold was in bank. And after that, there is fiat in 1971, and certificate fiat is just the same and just a different way, because back in the days people print certificate, now people print fiat money, and same is that same money, but there is no value in this money. So Ray Dalio said that you have to put that money in something more valuable. So let's get back to the video.
If you want to buy gold, you buy Bitcoin?
No, there are two purposes of money: a medium of exchange and a storehold of wealth. And Bitcoin is not effective in either of those cases now.
Store of wealth?
No, because first
potentially.
Of all, it's too volatile. Because of the volatility, you can't go next to it. Someday when it, I would say Libra or something which has more stable value, has got more potential. But also, who's going to do the buying? Central bankers and others. What are they going to hold as reserves? What has been tried and true? Are they going to hold digital Bitcoin? They're going to hold gold. That is a reserve currency, and it's been a reserve currency for 1,000 years. I know this is going to be the headline of gold. I want to emphasize a bit of gold is a diversifier, okay? And that's the advice I can give. I know I'm going to come out of here like Ray Dalio's wild on gold, and that's not exactly.
I'm going to say cash is trash is your headline.
But cash is trash.
So in this part, Ray Dalio was asked about Bitcoin, and his answer was very much correct. And that means that Bitcoin is such too volatile to hold by some very big institution or something like else. Don't let me wrong, maybe it is the right choice, and maybe it is not the bad of Bitcoin, but maybe in the future will be correct, but today is just too much volatile, and there is much more better tools such some assets or stocks or gold or something like it than Bitcoin.
But Ray, you would have thought that after all the years of zero interest rates in QE 1, 2, 3, and 4, you could have been making this case that entire time of what you were just making. Maybe there was so much of a lack of demand in the private sector following the financial crisis that it was able to absorb all of that. But coming to us now with that, at the risk of sounding like the boy who cried wolf too many times, I'm not saying you did, but we all were, the death of the bond vigilante, it's been well documented for the past 10 years. Now you're saying is the time to work.
I think it's totally different. Well, I would say when we are dealing with the negative interest rates,
which we've had for years and years already.
Well, no, we know how long it's been. Okay, and you take each country, and you take where we were in December toward the tightening, then you create an easing. We are now coming into a direction. And so the question for any of us is not whether it's early or not. The question for any of us is when you're holding all of those bonds and you have a negative interest rate or something, and how far more can you push that? What does the next 5 years look like? And the next 5 years is going to be something like that, plus there'll be more deficits. Now, more deficits means sell more bonds. Who are you going to sell the bonds
Why
to?
should I believe we're going to negative interest rates in the United States?
Well, I think that, and I'm not saying now, I'm saying that, okay, if you have a next downturn, okay, it's on average 500 basis points of rate cuts, then you can't do that, you go to QE, right?
Right.
And
we're having trouble
our
normalizing.
stimulant,
Right.
Right.
we don't have much stimulant. We have people at each other's throats over the wealth gap. And so what will the next downturn be? And also, why would you want to hold those?
So
why do you want to hold those at some point? I don't know. I could be wrong. I've been wrong plenty in my life. So I could be wrong. I'm just trying to describe, like, tell me why that.
So let me explain this. So many years ago, interest rate was 5, 6, even the 10% for saving, for bonds, for others. But after banks have printed so much money, there is no such interest to hold the money, and savings interest was dropping almost to the zero, and bonds interest as well. And the question is right now, is there what will be in the future when banks print more money and perhaps interest rate has dropped more than zero. So there will be no reason to hold whole bonds or whole saving or something like us, and maybe when people pull out money in the bonds and savings will cause the next big drop in the stock market. So that was all in this video. Let me know in the comment below what's your opinion about Ray Dalio, about these topics, and also give me one big smash on the like button and subscribe to this channel. And as always, I'm thanking you for watching, and have a good rest of the day. Enjoy.